Hey everybody, welcome back. Well, we have a lot to go over, obviously with Microsoft and some of these earnings tonight as well, but I think it would be remiss not to do the basics and just talk about what we're seeing here with the S&P futures. It's just constantly hitting this 61, 64, 75 and having a heck of a time. You are breaking this rising wedge, and I think this is really important. You have a longer one here, but if you just look here, this is not really what you want to see, where you try to rally up to it and then you fail. Now, some people will use this point down here as well, and they'll mark it to here. But before you can break that one, you have to break this one. And of course, there are others back here as well that we can go and talk about, where you can come to this point. And what you're doing is you're just going from minor to major to major. That's all you're doing. So for example, when you come up to that one, and you'll just see the skews of it, it's almost like a fork, right? So what we're seeing is we're seeing the first one, in my opinion, give way, and I think that's really important. Why is that important? Because that's how it starts. It starts with the first break. I mean, it has to start somewhere, and there it is. And that's a pretty clean break. The number one thing, you have no leadership, and I'm going to point it out in about 2 seconds and show you exactly what I mean by that. And this is really important, because if we lose this and we don't have leadership, you just don't go higher. Now, you have the NVIDIA event that's coming out, but take a look at the NQ before we get into the breadth, and then we'll go through the sectors super quick before we get into the devil in the details and start talking about Microsoft and one of the 4 things that set us off this week. But right back to Itchy's Bar. We've been talking about this forever. December 18th, can't get over, keeps trying, Matumbo, and then boom, just cracks. Same soup reheated, just different letters. Now, what I like about this is you tried, you just failed. You did try again to hold there, but you're just failing. It's just not good. I've seen good before. It doesn't look like this. Trying, put this point, reject, and you're sitting on it. Do the simplest of things and pop in the moving averages, and congratulations, you're back under the 50. So when you are below the 55 in my book, and I use a 12, a 22, and a 55, you have lost institutional support, period. Do we get it back? Maybe. When we look at the RSI is in no hurry here, and now we've broken neutral, and now we are back under. Speaking of which, if we just take a look again at the basic breadth indicators and start looking at something like the New York Composite, and we look at the McClellan summation, you can see it's rolling again right here below the 0 line. This is the exact opposite of what you want. Literally the exact opposite. Like if you could take a picture of what you don't want to see, this is it. What's more troubling to me about all of this is when I look at it before we get into the sectors, is that the VIX is could care less. Like it's not even concerned. And this is a problem for me because we don't have the panic yet. So what we're seeing is this orderly selling, and that orderly selling, when it's that simple, is a real problem. Now, I pointed this out in Saturday's video, and I will link Saturday's video at the end as well. It's not just there, it's everything. So when we looked at this on Saturday, one of the things that I really pointed out, and I'll link that at the end, and you're going to want to watch that. If you haven't watched that, you're definitely going to want to watch Saturday's video when you have time. Saturday's a little longer format. You should subscribe to the channel, click all notifications if you like this. 27% of you do not, which is kind of odd. But anyway, if you watch this, if you follow along, it's odd. If you don't follow along, then I guess it's not odd. But if you look at that 55 over and over and over again, no one's going to ring a bell, guys. And it's just risk off on everything. And they're literally walking you down the same exact way on the RSI as they've walked you down every single time. Like every single time this has happened. It's not once. If you look here, you can see the higher high and then the lower high. It's not once. The higher high on the stock, lower high. It's over and over again on these moves. You can go all the way back to 18 and 21 back here. You can see it. It's every single one of them was the same exact way. It just took time for it to kick in. But when it did kick in, you can even see it back here. When it does kick in, man, that's it. There's no help. There's no nothing. And people back here said that, oh, Bitcoin's going to go forever. Why? Oh, because now you have the futures market. The same thing's happening now where people are like, oh, Bitcoin's going to go forever. Why? Oh, we have ETFs. Well, you're out of 401k money, guys. 401k money, they're all fully invested right now, right? So what's the impetus? What do you know that somebody else doesn't know? Is it the fact that the government might buy it? I'm pretty sure everyone and their sister has heard that by now, and that's why they all piled into it. So if you go look at net outflows here, you can see why this is doing what it's doing, which led us to shorting MSTR on Friday and having a pretty good day with it. I think we were up 150% at one time in those puts today. It's just going to be easier if I just show it all this way on one screen versus going over and over this again. But what we were doing was the Microsoft short for obvious reasons. We're going to get to that research in a second. The MSTR puts that we had from the option trade, we bought the 300s, we paid 10 for them. Then we shorted coin, then we shorted Microsoft. I actually trimmed some coin when I was down just a little bit in the trade. And then NVIDIA, then Tesla started rolling. And then the PLTR. There's these setups you guys have to learn. I'm going to show one tonight. The more I think about it, I think it's a good idea to show you one of them because you're going to see them a lot here. And then you can just see the Microsoft short. And then we CBNA, and it just kept going down the list of names and names and names. It was a great day to short, and you had to be set up. If you were at the pre-market live, and you just see them all right here. Hold on a second. I can do it this way. Just close them all over, and you can just look at them yourself. And the timestamps, you can go back and take a look at it, where we put the stops. CBNA had 212, coin was 228, and all we did was just trade down. Now, why is this important? It's important for a couple reasons. When you come in and you have a plan, life gets easy. And so when you're prepped ahead of time, and I'm going to do a video on this on how you should be prepping for the day, because I don't think a lot of people prep. I really don't. I think they just come in and react. But if you do your prep work, this stuff gets super easy. Your levels are already drawn for you. You already know what to look at. You already know where to put the trade on. We actually re-entered this later in the day. I just closed it too early, candidly, by the time it kicked in again. I thought for a second that we might see some short covering. We just didn't. So we still made like 6 or 7 on the second time. But the purpose of this is when you start breaking down like this and the underlying sectors start breaking down like they are breaking down, you need to pay attention. What do I mean by that? Index sector stock. So when you look at this, call this a commodity, which it pretty much is, the underlying asset class, meaning the MSTR, the coin, they're going to get smoked. They just are. Hood. Even Hood had good news today and still came down on that news. So it doesn't matter what it is. If the underlying asset drops, like CLSK, Riot, any of those names are just going to get smoked. It's the same thing with copper. If copper gets smoked, they're going to kill FCX. They're going to kill SCCO. It's just the way that it is. So they're always tied to that. But in regards to the sectors, you just need to keep that in mind. But this gave us, we had that other trade, and then the coin trade was just super. I mean, it was easy. I felt it was easy. It's just when you have to be set. You have to know what you're looking for. So like when you see something like this, for example, where you're down and then you have a bearish or a bullish engulfing and then it's followed by a bearish engulfing, and it's not perfect, no, but it's there, where you have like bullish engulfing, bearish engulfing, you need to pay attention to this. Here, take a look at this. Obviously, this is a big green bar that rips up. And then what I get is something like this. Now, what we're going to do is just turn this one red for a second. I'm going to make them at the same length, and then you're going to recognize this pattern pretty easily. You're going to recognize this as a bearish engulfing. And so what we've really done here is this bar has taken out that bar, and by doing that, let's move this over. And then by doing that, what it's really doing for us is the following. It's just encompassing everything that this other bar did. Now, when you see this, you want to pay attention, because whenever you see this, there is a, let's say probably a greater, I think it's like around 52 or 53% chance of this bar following this bar. But wait, there's more. When you see this and you have another undercut under it like this, and then you rip over like that, you want to pay attention. So what you would have here, just let's clean this off a little bit. So what you have here is you have a pattern of a bearish engulfing followed by a bullish engulfing. Now, there's a couple things to point out here, right? Follow me? Bullish engulfing, but you had a bearish engulfing. So you have a certain percentage here that this is right. And then when you see this reversal, you know that most likely you're going in whatever direction this third bar is, depending upon your time frame. And the other thing that this does too, and it gives you that pattern also of a megaphone pattern. And if you think about what it's doing when it does this, is it's really just getting the stops up here on that time frame, getting the stops down here on that time frame. Those that are long, it's stealing from them. Here, it's stealing from them. It's doing the same thing on the short side and the long side over and over again. So what's happening is people are getting whipsawed. In this kind of market, this pattern, when you see it, you want to act. The exact opposite is true. We have this being a bearish engulfing and this being a bullish engulfing. What will happen here, and let's just change this, is you have the same pattern, but you have it differently, where you have now the, oh look, we have a bullish engulfing. And then it gives you that higher high, and then the undercut, and you get a bearish engulfing. When you see these, you don't know if there's another one behind it, or if you're going to get inside bars, But you need to act on these, and then once they confirm, even if you get stopped out of a portion, you can just add back to it. This kind of trade presented an opportunity where we pulled a lot of money today out of coin, just off pattern recognition. And what this does is it gives you an objective area where you can look at the trade and make an informed decision on whether or not you're willing to do it, and then just quantify the risk and go from there. Here, watch this play out.
What coin do? Oh, you're toast. I'll take the risk. What are you going to do? You're going to go straight up over them? I doubt that highly. I'm sure that's really rare to do. I'm not saying it can't happen, but for you to have it bullish engulfing and then to follow it up with a bearish engulfing is usually like the kiss of death. Cut half of this coin down like 20 cents. Now I'm just going to watch it. If it takes out the high, I'm out. But that's it. Time to double the coin again? No, I don't like that at all. Maybe if it breaks or gives me something more that I can dig my teeth into. Stay out of the way. Made money. Just trim on the way down. No need to be the one catching the full house. Trimmed a little coin at 230, up 6.5. A 12-old coin. I'm not closing anymore. Pull its coin out of a huge chunk. All right, so I need a rally now. And then I'll short the rally. Everything that I'm short, that I'm not willing to go back to break even on those pieces. CVNA, Coin, MSTR, Microsoft, PLTR. Anything I'm not willing to go back to break even, I'm 100% out.
Now, I did get asked to do more tutorials, and I do think it's helpful to actually see the live trades and to actually see the timestamps with the live trades so that you can see what's really going on instead of saying after the fact, oh, I did this. Seeing it live, I think, is extremely helpful. As always, you're welcome to comment on that and what you want to see, but I think understanding those patterns, etc. Anyway, something like Microsoft today, I came in, I was short as I showed those timestamps, but what you're seeing again is you're seeing pattern after pattern. What are we doing here? We can't break 400. I actually shorted it again. It rallied up. And then I shorted it again. I'm like, oh, I'm going to catch it again. You see this little move right here. I'll show you this, where it undercuts right there. And it's so funny about these days. People tell me they're long-term traders. Let me know how that's going for you, holding this stuff long-term right now. I will always, when I start showing the day trading, the people will come out and say the reason that they're taking losses is because they're swing trading. That's good. So you see how this hacks right here? You see how you started to break down again? And that's your lowest bar right there of that. I'm like, oh, we're going lower. So I shorted that. It didn't work, came back over, and I'm like, all right, I'm out. I think it cost me like 20 or 30 cents. Maybe more to redo it, and less than $1. This is the kind of stuff you want to pay attention to. What should have happened today is this should have ripped. This should have absolutely ripped when they came out and refuted that statement, because it dropped precipitously, like $20 on that news. And it didn't do that, and that's a problem. Now, as promised, I read your comments, and I stated that I'd be doing more research-oriented, focused, because a lot of people say that they don't have access to it or they don't understand what they should be looking for. So this is the note that really started it off on Friday. Cowan made some calls, and what they were looking for is that data centers lease cancellations by Microsoft. And what they were saying was our channel checks indicate Microsoft is canceling leases in data centers. Now, they get very specific about it and the nuances of how to cancel these leases. Oversupply position for Microsoft. This is very interesting because they take the leap of, it points to an oversupply. No one is suggesting they have an oversupply, but they could have canceled leases for a myriad of reasons. One, I think, is because they're pulling away from OpenAI, and that's pretty obvious. But one of the core things about this was, wait a minute, do we have oversupply for data centers? So we saw some selling on Friday, and then we have that continued today. But when you start to dive into this, there's some more details that are worth paying attention to. But this is what started the sell-off. Now, one of the investment banks had a note today where they went out on a field trip. And I like these field trips because they go on the ground and they tell you exactly what's going on. And the tailwind for DLR and EQIX, which are the two biggest data center REITs out there. Participants believe the supply-demand imbalance will last through 28. Build costs for new data centers continue to escalate. On pricing, participants point to 3 to 4% escalators as a good way to test elasticity, but skepticism they can move higher from here. Hyperscales have opted for an 80-20 mix between owned and leased facilities, but that's more 50-50 today given market power constraints. So today, given market power constraints. So between the things of, they used to go 80-20, now they want to be 50-50 because they're still having power constraints. That leads us to the same issue that we've been talking about. They're having issues with power. They need more power. So the AI power trade is still there. It just might go through a little bit of a wave. Industry participants think DeepSeek could increase inference demand on lower cost barriers. Accelerates participation in small and medium-sized enterprises, a theme at EQIX in particular. Well, this is very different than what Microsoft said. And I should reiterate, it's not what Microsoft said. It's what Cowan said by their ability to read the leases. And I think they took a little poetic license, but maybe that's what they have to do to get ahead of it, right? So Transcript, which is really good, and you might want to follow them on Twitter because they actually just are extremely objective and they're like, here's the facts, do what you want with it. And Microsoft issued a statement that we may strategically pace or adjust our infrastructure in some areas. We continue to grow strongly in all regions. Now, this comment about some areas, they are kind of pulling away from OpenAI. If you take a look at this, and SoftBank's starting to fill that role a little bit. And I think there's a couple reasons for that, but I'm not going to get into it in this video. I do think it's important to understand that our plans to spend over $80 billion on infrastructure remains on track as we continue to grow at a record pace to meet customer demand. So you're not going to come out and confirm your CapEx spend and then pull it. So the only thing that happened this quarter is CapEx went higher, despite what everybody's saying, despite everything that we're saying out there. So fundamentally, we look good. And Microsoft did call Jeffries today, apparently, and said they refute any change to data center strategy. I think this is pretty good. I wanted to clip these from the headlines because I do think that it's really interesting what you're seeing out there. You're seeing a battle where people are trying to figure out and they're trying to get ahead of this, and that's good. What we're seeing is we're seeing a massive shift in risk tolerance right now, which we will address. But the bottom line is the Cowen note that started this, really, when it started that effect, it really has been refuted now. And Microsoft would look really silly if they cut CapEx in a quarter. Yeah, could they do it? Sure, but they would lose a lot of credibility. There's no reason to. Just come out and admit it now. So this takes us back to what do we do now? And this is really important. By the way, if you are on the wait list to get into the community or you're trying to get in, the wait list is link in description and a bunch of invites will go out. They are time sensitive, so just look for the email. But a bunch of them will go out maybe tonight. At the latest, they'll go out tomorrow. Just be aware of that. Now, but what's really important about this from my perspective is we should have bounced, but we didn't break, but we still should have bounced. So then I have to go back and say, okay, well, what are the next things that we have to look at? And this is, some of this you may have seen from Saturday, but I think a good review is healthy. IGV is not leading. The SOX is not leading. Cloud, guess what it's doing? I'll tell you what it's not doing, leading. Now, the one thing about the SOX that is good is that you came down to the low and you didn't break. So then we might take a step back and look here and go, okay, well, yeah, we broke the 55. Yeah, we're busted. Yeah, you are busted. And you're coming into Wednesday and you have CRM coming out with earnings and I've got a declining 55-day moving average. Do I want to be long? No. Like, not when I've got a declining 55. Like, it could pop, sure, but do I really want to be in this? My sense of this and what we say in the community and what we've been saying, and you may have heard me say pre-market, when the dam breaks, you step away. You don't put your finger in the dam and think you're going to stop the water. You're not. You're going to drown. You pull your finger on the dam, you step aside, the dam breaks, all the fish start flopping around. Then you just pick up which ones you want. If you think about it that way, it's a heck of a lot easier. I'm not trying to be Aesop here, but you get it. So if you think about it from that perspective and you know CRM's coming out with earnings and you know NVIDIA's coming out with earnings and this looks like a suck salad. I mean, this looks ridiculous. For anybody to look at this and say they're expecting it to be good. Even when the Microsoft news hit, this is what we're dealing with. So we have no leadership there. We go look at the XLF. XLF's rolling. XLC was leading. How's that look? You're holding the 22. Then we take a step back, and you'll remember that we talked about the breadth on Saturday, and this is why I always say subscribe, because everything we go over is linked. So when we look at Saturday, what we're going to get here is these movements. And we're not linked in here yet to Friday yet, right? There's Friday and there's Monday. So we're not, they didn't post it yet, which I think it's around 5, but I'm not gonna have the time to redo it. What you will see, what I said was long-term, we're fine. The 200-day, this is the 200, the 50, the 20, and the 5 percentage of stocks in the S&P that are above their respective moving averages. Long time, you're fine. Short-term selling, I need this to be in the 4s, the 5s, for us to be washed out. We're not anywhere near washed out here. You're not even close to washed out. Matter of fact, when you go and take a look here, this could be in the teens or single digits before you're washed out. You're nowhere near that. And so there's definitely the opportunity for more pain out there. And then you look at the S&P, watch this on the 4-hour, but wait, there's more. Bottoms, where it hits a bottom, right? They are formed by getting to the 30 on the 4-hour. You're nowhere near it. So everybody needs to kind of relax. The other thing is, the speed in which these things are dropping. This was just a gimme gap fill. I mean, it really was. It was such a simple trade today. But clearly they're gap filling, and you could see the speed. When you see the speed move like this, like UPST gap fill, like maybe that's going to hold. Maybe you got a bunch of charts you have to run tonight, but maybe that holds. But I don't think so. I think you just have to step out of the way and understand we have to get through NVIDIA and then kind of go from there. Now this evening we got a couple, what I think, and you just look at the blood, like it's everywhere. But let's go to this here and show you this. So HIMS came out at the time of recording this. I am short HIMS. I did it after hours. I did not do it into the call. I want to be really clear about that. Their gross margins were off. And people are not picking up on that yet, but you're going to probably on the conference call. But you're going to want to hear how this goes. The way that I always look at this on the short side is just make sure that you're not above the VWAP on a close, and you always put an anchor VWAP there. But on the surface, people are going to go, this looks great. You beat by 1%. You raised revenue, but your earnings were down. Well, there's only one way to do that. You're spending more than you're taking in, and or your gross margins are off. So your gross margins being off so that you can increase revenue and gain market share, which is what you want to do for a company if you're long term, right? I mean, you want to drop your price and so that you can go out there and do that. But people don't want to hear that when you've gone from $20, which you were back here, to $75. Right? You invented air up here and nobody wants to hear it anymore. So this is what you're going to get. The other one, the high flyer out there, is TEM. And this one's selling down but trading around. You're going to just have to listen to the conference call tonight and see how that goes. The other ones that I would say for tomorrow that are going to be super interesting that I would watch first thing in the morning, Home Depot, for sure, you want to watch that. You're going to want to pay attention to that one for sure. DOCN is always a fun one, but Home Depot is going to tell you how the consumer's doing. And after that consumer data that came out on Friday, people are a little scared. That is it.